Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 13th of January, 2022. This is episode number 2100. What is it? It's so many. 2151. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for joining me for another Trader Bite, where we look at the market narrative and set up the key trades of the day that we're going to look for and let the market confirm or deny or reject our idea or reward us when we are there and have fulfilled the four requirements of a winning trade. Here's where we are at in terms of where we stand in the market right now. We have a mixed market. It's slightly risk on, just slightly. But really, it's a mixed session. We've spent a lot of the session below yesterday's settlement. You can see that for the S&P, for example, the overnight inventory is actually negative despite a 25 basis point increase from yesterday's settlement. The inventory is actually below settle, which tells me that a lot of the volume took place below yesterday's settle, and it seems to have seen acceptance. Now we're breaking away. We had a decent PPI release this morning. The initial jobless claims in the U.S. Were slightly higher, which is worse, 230,000 versus 200,000. Core PPI came in line at 0.5. But the PPI, the comprehensive PPI for the month of December, came in at 0.2% versus 0.4%. This is an inflation number for producers. Today, we have to keep an eye on, the biggest theme right now is the monetary and fiscal taper or a retraction of stimulus. And so just keep the opinion of these Fed speakers is now quite significant. There have been a lot of comments from Fed's Harker this morning. The expectation is for three rate hikes this year, potentially four. It seems like more and more FOMC committee members are okay with four hikes in the 2022 year, depending on how inflation comes in. If inflation continues to ride high, then they are going to look for more hikes, which basically drains liquidity out of the system by charging more for the short end of the curve. So that's what's key. The package that the Democrats are trying to pass, Build Back Better, still has a chance. There's one senator who's standing in the way of getting that pushed through, and they're very likely to make that happen as it's important for the upcoming elections. Lots of interest rate related news flow this morning, and it'll continue to be that. So that's what's interesting here. Today, Fed's Brainard's confirmation as vice chair, her comments were released. Her comments were very similar to Fed's Powell's, except they seemed a little more forceful or pushy. I don't know what the word is. They seem to be more stringent in the concern, in her concern about inflation becoming entrenched. So pay attention to that at 10 o'clock Eastern. There's likely to be news flow coming from that. Fed's Evans at 1, 30-year bond auction at that time. And then tonight, for those who trade the Asian session, look out for these key numbers, exports and imports year on year, December for China. In terms of what's going on all around, crude has just really taken off. Crude yesterday finished again in what is an impulse up move, an initiative move, and is pushing into a key area up here at, I forget the number, I think it's 83.47 or something like that there. If you go back to crude to where we were here in the $84 area, you'll see that it came up to the same price multiple times before falling, and we are in that area. We're coming into that area, major stock zone up here. Just pay attention to that area when it comes to crude. I mean, crude is really responding here, and don't forget the crude is priced in dollars. So not only does it respond, it's a commodity that not only responds to supply and demand, it also responds to the value of the dollar. Okay, so just there's a component there that's dollar related because it's an asset. It's a physical asset measured in a variable currency, and so that can have an impact as well. As far as the S&P, 160,000 contracts have traded. This is lower than what we've seen in the prior overnight sessions. The overnight inventory is 22% short, meaning 22% of the volume traded more below yesterday's settlement than above. The range is pretty decent, 27.5 points. We pushed the 47.30. Yesterday, the S&P pushed a key number. We had a single print at 47.40, which sets us off in a low volume node and potentially a very quick run to 50 and above to 65. We'll talk about that in a minute. The point of control for the S&P is 47.18 with settlement at 47.16 and the close at 47.18.5. So a big sandwich going on there. We have left the full session VWAP and mid beneath us. So the S&P is still inside of the prior day's range. Looks initiative, but really it's imbalanced. Don't get too excited and jacked up about the fact that it looks like it's breaking out. I don't think it's in a breakout mode. If you look at the narrative, it's really imbalanced. Yesterday, just briefly, I want to cover this. I don't like spending too much time on the review, but I always do because it's so important to building a good plan for today. But yesterday, the expectation is we would push into, you see that 47.40 here, 47.40 and the stock zone, and on the extreme 47. We ended up with scenario 2, push into 47 and then fall back through the expectation given recent range statistics. The expectation was 46.83, and yesterday we turned at 46.96. So overshot on that end, but we ended up yesterday with a higher low, higher high. Here's what we did yesterday in our review segment. We opened, spiked up, tested up immediately, came back down, consolidated, pushed the high at 47.39.50 to that single print almost. We missed it by 2 ticks. And then we had an impulse down, and that's the first chance actually yesterday where I could clearly see a trade setup. It was very choppy. You could see that yesterday's action is on this PNF chart, 1 tick by 8 tick PNF chart. The action was not all that great. We didn't have as many rotations as we've had recently, but we did break through. We had an impulse down, so we're looking for a pullback to short. It broke through. It put the IB in, and it broke through the IB immediately after it put it in. The IB was 16.25, and so we're looking for a pullback into the IB or a pullback into the full session or RTH mid and so on. Although if it had gotten to the RTH mid and VWAP, I would have had to wait till 28 to get short. But the idea here is to get short, looking for the gap fill. The reason being is that yesterday we opened in a gap. We established an opening swing at 34.50 to 21.75, and that's subjective. And then once it breaks that and it retests, we want to shoot for that 47.06.50. So we're looking for a trade somewhere around 47.20, 18.20, looking for a push to 06 and settlement in the prior range. It got that done. It did that, came back in, and then from here it was just a chop fest. We ended up with basically a balanced profile. We've shifted the point of control higher, higher low, higher high, uh, one time framing up on the daily. And we are very efficiently moving towards the map shows 47, 47.50. 47.50 is a mid-century and a gamma price, 47.50, and then above there, 47.65. And then and that's the thin zone from 40 to 65 is the thin zone. So that's not, you got to be careful. Don't short that in the middle of nowhere. Once we get to 65, then the key number is 47.80. So we are sandwiched right now between the high volume node, the most traded price in the area, the MC point of control at 83.25. Look, I'm saying a lot, and there are people here who've been following what I'm doing and saying since 2005 when I first came online. And picked up this Futures Trader 71 name. It's how old it is. And there are people who've been following these trader bites for the last 8 years and can follow along with all this jargon. So if you're losing me in a jargon, it means I'm not doing a very good job explaining. However, I want to keep these videos short, so there's a lot of content. Just go to youtube.com, do a search for Futures Trader 71, and look at the Futures IO and all these other videos to really catch up. If you are not reading the narrative of the market, if you're a trader that's coming in and is using just a mathematical system or a moving average system or something like that, and you find yourself frustrated and constantly changing how you trade or are confused about how you should trade, you have an epiphany, you watch a video of some guy scalping order flow, not recommended as a trading method for anybody that's just starting. I would not do an order flow or scalping based thing or use a scalping based tool as a starter. It gives you ideas, and then you come in and you might see success for a day or two, and then you're back to forgetting what you were supposed to do. The biggest thing you should do as a trader is to follow the narrative, follow the auction. It's an auction. This whole trading thing, doesn't matter how much lipstick you put on it to make it look nice and pretty. The whole thing about trading and pretty much all commerce is it's all an auction. Everything is bid and offered, and we're all looking to find a fair price. As a consumer, you would love to get things for a 50% discount from the price you perceive to be value, but you're willing to transact at value. So if you believe that something is worth $10, you would love to buy it for $6, but you're okay buying it at $10. And a seller is the force that's going against you. They would love to sell it to you for $16, but they're okay selling it for $10. And the market's entire purpose, despite all the fancy charts and VWAPs and whatnot, all this, just break it down to something that is really simple. The core of the market is time, price, and volume. And that's created using prints. Every tick generates time, price, and volume. And your job is to follow what these ticks are doing and how much there is at these prices, so you can find that $10 figure, that balance. And the advantage of a market that we trade, again, futures are not suitable for all investors. Unlike equities, futures, there are no restrictions on shorting. There's no easy to short list or hard to short list. There's no borrowing against margin, this and that and all this. You can just sell it. And so the advantage in futures is that it's a fluid buyer-seller market as opposed to a supermarket. You can't buy a jug of milk at the supermarket, go stand outside and sell it to customers coming in. And so this is a much more efficient mechanism. And so it happens very, very fast. But the idea, the bottom line idea is the same. It's the same. We are constantly checking prices, moving higher and lower, checking prices, trying to find the equilibrium point to execute as much of that product as possible. period. Okay, the reason the price of cars have skyrocketed, the price of commodities has skyrocketed, is because there's not enough supply for the demand. And so the market finds a high equilibrium point. And at some point when the supply comes in, prices will move down. And so there's an auction on car prices, home prices, lumber, crude oil, whatever. This is the same. Don't complicate it more than what it is. And so the idea here is to follow and see that, wow, we ran up, but yesterday we couldn't run up further. So we pushed to 47.3950, and clearly there was no interest from buyers to hold these prices up there. And so sellers start coming in, liquidating or initiating. We don't care which, we don't care why. We just see that they're liquidating, initiating, and we end up with basically a balanced day. We have an extreme. You can see there's an excess on the low, an excess on the high. This is a market that is resting. Okay, so I understand this is turning into a webcast and a lesson, but I really would like you to change or enhance how you look at the market and break it down into a simple auction. And volume profiling truly is a pure way to look at where prices transacted and how much. So we can see that the figure between 47.26, 27 down to about 47.10, and we're currently trading 47.28, so we're just above that. That area was really a sweet spot for the market. So there's no reason to initiate a trade in that area except from the outside in, or when it exceeds it, to come back in. Of course, hindsight is 2020. Sellers were dominant yesterday as an aggressor. You could see the delta was negative into the end of the session. Coming into today, let's turn these off. Coming into today, you could see we opened back up, immediately sell off. So you could see the dominant force was still there on the sell side, and then they start to pop higher, and then we popped a lot higher to 31 here on the PPI release. But overall, it's a lazy auction. We're still inside of the yesterday's range. We are just above the value from yesterday, which is at 26-ish. We're just above that. So what does that funnel bring us to? The funnel brings us to, hey, be careful this morning. Step back, because the market's opening in range just outside of value on what was a resting day. We saw yesterday that sellers dominated prices above the 30, buyers dominated prices below the 10, below the 5 really, and it's sitting sideways. So don't come in here today with your awesome breakout plan, because it's not likely to pay off. The market is in a rest. And you'll notice that the overnight session created very clear triple distribution. So what that does is it gives us a very temporary, right at the open, this stuff is going to get filled quickly. It gives us a very temporary view on risk reward. So you've got a line in the sand at the 23, which was yesterday's open. You have a line in the sand at the 13.12 area, which is the value low. And you have a very clear overnight point of control that is prominent, that could move to the top. But we have clear risk reward areas. And as the market moves through that low volume area, it is likely to test the next high volume area, and so on and so forth. Let's move on to what's expected for today, so you can all run off and get ready for the day. Please take what I'm telling you to heart. My intention is to help you make progress, right? You make progress, we all make progress. Okay, so what's expected for today? Again, given the way this is playing out, the overnight inventory is basically balancing out, and we have these lines in the sand at 23 and about 10. We have value at about, let me see what the exact number for value is. Value high is at 25.50, value low is at 09.75. So I wasn't far off. 26 to 10, 26 to 10. So these numbers are in line. And so the expectation is an open auction that responds, comes back to the overnight point of control, which is on top of yesterday's point of control, the market is likely to stay in balance today for much of the morning until Brainerd starts speaking. And if she surprises the market, it might respond. But to be honest with you, today is anybody's guess what it might do here. I am going to take a back seat to the open. I'm not going to be active on the open. This is not a good day to jump into a position. I don't expect it to consolidate on the open and break out immediately. It could. Anything can happen. You have to take that into heart. The market does what it does. But overall, I'm expecting it to come back and test the value range because it's opening outside of value. It's going to likely get into value, and I expect it to push back to the 10 right here, to the 0510, and then form a base to come back and finish strong. Why? Because that's where one time framing up. The market still has strength in it. It's really anybody's guess. Scenario 2 is just the same line, except it starts to move lower. That's scenario 2. Any move lower will target 83.75. Any move higher is looking for 47.50, 47.50, 50, 65, and then ultimately 80 is the golden numbers, the big balance, big fair price up top, 80 and 83.25. These are the big pieces, and then we're just diddling in the middle right now. So put things in perspective and make sure you trade accordingly. Trade the narrative. Don't trade what you want. Don't trade your P&L. Don't trade some moving average by itself. Understand the narrative and understand that we're opening in balance, and that's not likely to bode well for breakout trades. Good luck.